Well, crazy days, extraordinary times. Thank God it's Friday. Up. That's the thought which occupied my mind when I walked into office this morning. What is happening? What is coming next? What should you do? And how essentially can you decode the market? So we'll try and make sense of the mad volatility, what it means for your portfolio, what is more importantly coming next. And in this extreme volatility, how can you actually pick some spots to make money? Before I generally talk about the narrative of where we are headed and what has happened last night and where we are in terms of in positioning, they say volatility is long-term investors' best friend. And there's a difference in risk and volatility. So how can you really maximize on this volatility? We'll talk a lot about that. But just to set the context here, when we were away on Thursday, Wednesday night, US markets had a wild party. And part of that party got challenged because of, I guess, midnight compulsions. Net, everybody knows the news by now. If you're watching the show, I'm sure you've read the news on Wednesday night or Thursday morning, that the US administration is a mood to negotiate. And that, in a sense, has really calmed the markets down. But only the equity markets down. Why? Because the bond markets are still volatile, the dollar is at 100, and commodities are struggling to hold on. So are we in for a gap up start? What do you do after that gap up start? Could we see bout of short covering? And given that half the gains were knocked off yesterday, which is on Thursday, Wednesday night, half the gains were off on Wednesday, half the gains were off on Thursday. What are the chances that Wall Street also gets into a downward spiral? You know, both of us seen 20 years plus of market. But there are days when you say, OMG, there are days you say, ye kya ho raha hai? There are days you say, let it just happen.
Yeah, because on Wednesday evening, you were feeling bad that our markets are going to be closed for a trading holiday on Thursday. I mean, you know, it's important to put
First
into
time
context.
I felt bad that why was a market holiday
Yeah,
middle of the
exactly.
week.
I mean, you was just mesmerized seeing the way the markets were moving. I mean, the US equities had their best day since October 2008, and we're not even, you know, now drawing parallels to 2020. That's the COVID lows. It's got back to the GFC time. But yeah, you know, important to highlight what was happening on Wednesday evening, and then we'll talk about what happened last evening. The S&P 500 index jumped up 9.5%. You had the Nasdaq scaling higher by over 12%. Russell 2000 up 8.5%. VIX was sharply lower. It got slashed by about almost 35%. Names like Tesla up 23%, Apple up 15%, Amazon up 12%, Nvidia up 19%. Brent oil jumped up 4.5%. US Treasury yield was higher by about 4 basis points. And I think I mean, just draw a correlation to what happened last evening then and the kind of wild swings. The 10-year yield has jumped 8 basis points. It's back at that 4.41% mark. The S&P 500 index overnight fell 3.5%. Nasdaq fell 4.5%. And the Russell 2000 was also down about almost 4% or so. Brent oil, again, it's seeing a negative move. It's down by nearly about 3%. And the dollar index has moved about almost 2.5%, and it's now around that $100 per barrel mark. China, of course, is going to be facing a 145% tariff from the US. Remember, it's 125% of the reciprocal tariff plus 20% additional tariff which is coming in, and a potential Trump-Xi phone call might happen, in Trump's own words, at some point. That's what he's saying about negotiations with China and US. But yeah, what's given, and I think what's the silver lining, is that the US wants to negotiate. They even want to talk to China, and they don't want tariff wars.
So Aisha, look, I think you can safely assume that we have worst of the tariff news in terms of rate and ceiling is out. Whatever negotiations will happen, they will be at a much lower rate, and negotiations will certainly happen. Why negotiations will happen is why? Because I think the US administration, I'm surprised they realized it late, but they've realized it. Better late than never, that it is going to hurt them much more than what it will hurt the world. So in the process of making America great and making others suffer, I guess America will suffer the most, and that is what I think they've realized. The problem, Aisha, is that this 90-day window is something which will again lead to this entire suspense environment. What will happen in 90 days? How will things move in the 90 days? Who will get what? And I don't know what the flow of the news would be. That's part number one. Part number two is that the whole idea that US dollar will strengthen, tariffs going down is good news for the bond yield because if inflation does not come back, that theory is not moved out. So for me, rather than the equity market, I think it's the currency market and the bond market which will give you a cue right now. If I look at the setup right now, well, the setup clearly is in favor of emerging markets like India because we've not retaliated. That means the tariff right now will stay at 10%. Second, weak dollar is good news for us. Third, commodity coming down, I think that is also good news for us. Now, if historical correlations are to be played, what are the historical correlation? Which is that weakness in dollar is good news for us. Weakness in dollar, decline in commodity is better for our margins. And if some problem is happening in the world, India will get lion's share of inflow looking at the positioning because the war is now between China and US. India has not retaliated, so technically you only are in that 10% band. And we know that all the grapevine which we are picking up from the government sources that look, something is going to happen. So you make an assumption and say that, okay, what do I do for 90 days? I think you should not panic. You should stay course. We'll talk about themes and sectors. But in general, whatever is happening in the market, I think directly, indirectly, I think India's positioning both at a trade level, at an equity market level, in terms of the business appeal, I think is getting better. I mean, we've taken less casualty of what is happening in the world as of today's news. Kal kya hoga mujhe nahi pata. As of today's news, I think we are in a better position.
Oh yeah.